This is Nightly Business Report with Sue Herrera and Bill Griffin.
Moving higher, stocks start the week on an upbeat note after the president says he does not plan to raise tariffs on Chinese goods at the end of the month. Paid too much, Warren Buffett admits that Berkshire Hathaway overpaid for Kraft, a company that is accounting is now the subject of an SEC investigation. Riding into the future, and it's not on a gas-powered bike, but are electric motorcycles enough to win over young consumers? Those stories and more tonight on Nightly Business Report for Monday, February 25th. Good evening, everyone, and welcome. Bill Griffith is off tonight. Investors started the week with news that they had been hoping for. President Trump is stepping back from his hardline stance on a trade deadline with China. Following 2 weeks of high-level talks with the world's second-largest economy, the president postponed the date for raising tariffs on $200 billion worth of Chinese imports. And while investors are cheering the news, many are also asking, what's next? Kayla Tausche is in Washington tonight.
As President Trump heads to Vietnam to defuse nuclear tensions with North Korea, he's touting another area of de-escalation, trade with China, telling U.S. governors he's close to a deal.
We're going to have another summit. We're going to have a signing summit, which is even better. So hopefully we can get that completed, but we're getting very, very close.
Talks with China have intensified over the last week. China's President Xi Jinping touting significant progress, and a delegation negotiating on his behalf stayed an extra 2 days. The result, according to tweets from the president, a deal in the advanced stages, progress on intellectual property protection, technology transfers, agriculture, services, and currency, and a potential deal announced at his Florida resort Mar-a-Lago in late March. President Trump credits tariffs for getting talks this far.
Tariffs are hurting China very badly.
But investors and business leaders are breathing a sigh of relief that tariffs could be rolled back. Here's Warren Buffett.
I'm relieved at the idea that there's still some chance that sense will prevail. It is bad for China, it's bad for us if we get into some kind of a trade war.
Sources say the U.S. and China still disagree over how to enforce a deal. And within the White House, too, President Trump and his top trade official clash on what form the deal would take.
By the way, I disagree. I think that a memorandum of understanding is not a contract to the extent that we want.
From now on, we're not using the word memorandum of understanding anymore. We're going to use the term trade agreement, all right? Okay.
The substance of any trade agreement or how long it would be effective are still a work in progress. China has proposed some concessions that would go through 2024, the end of President Trump's potential second term. For Nightly Business Report, I'm Kayla Tausche in Washington.
The easing of trade tensions sparked a rally overnight in China, which saw stocks rise the most since 2015. Here in the U.S., stocks followed suit, touching almost 4 months high midday. They were also helped by some deal-making activity, which we'll get to in just a moment. Today, the Dow Jones Industrial Average rose 60 points to 26,091. The Nasdaq was up 26, and the S&P 500 added 3. Today's stock gains add to the strong move higher this year. But how sustainable is the rally? Mike Santoli looks into that.
The stock market in 2019 is off to its best start in 3 decades, taking the S&P 500 right up to the level where rallies failed 3 separate times last fall. Now that the losses of the worst Decembers since the 1930s have been recovered, Wall Street is asking whether this rally can continue higher from here. While the market action itself is encouraging to the bulls, the advance has been unusually broad, with the vast majority of stocks up dramatically from the December lows. Pullbacks have been shallow and brief on the way to a nearly 12% climb in the S&P year-to-date. Another point for the bulls, investor sentiment is generally muted. Surveys show only modest optimism, and investors have pulled more money from stock funds this year than they've contributed to them. From a contrary opinion angle, that's a net positive. And with the Federal Reserve emphasizing its patience toward any further interest rate hikes, bond yields have stayed low and corporate debt prices have firmed up. That helps to support equity valuations, which are now right around their 5-year average compared to forecast earnings. But those earnings estimates are a possible stumbling block. Projected earnings for the S&P 500 companies have declined steadily in recent months, with a drop in profits now expected for the first quarter and total growth for the year down to about 5%. Investors seem to be betting that an expected trade deal with China might coincide with stabilizing earnings forecasts and a boost to corporate confidence. If so, that could help validate the rebound and sustain this rally. But as stock prices go higher, so does the need for economic news to improve rather than just seeming less bad than expected. For Nightly Business Report, I'm Mike Santoli.
Jason Draho joins us now to talk more about the market and what might drive stocks from here. He is head of America's Asset Allocation at UBS Global Wealth Management. Jason, welcome. Nice to have you here this evening.
It's good to be here.
You say that you are still positive but prudent. What do you mean by that?
Well, what we think is that the economic outlook is still attractive, and the markets have rallied a lot on both the good developments on trade and also the Federal Reserve turning patient and providing tailwinds to the markets. But the markets have moved up a lot this year without actual economic data really getting better. Both in the U.S. and globally, we've seen kind of weakness over the past few months. So right now the market's kind of moved ahead of the actual economic data, which we think will get better in the U.S. For example, some of the weakness we've seen is a result of the government shutdown. The December sell-off clearly spooked both consumer and investor sentiment. That's going to have a sort of a near-term impact. But looking ahead 3-6 months, we still feel comfortable at the outlook, and that's going to provide further tailwind on the upside. But prudent because a lot of good news has already been priced in.
So does that mean that you've changed your exposure to stocks, and if so, how?
So just last week, we did our kind of latest update. We were already kind of overweight stocks relative to our benchmark. We dialed that back a little bit. We were kind of 3% overweight compared to our benchmark. We're down to 2%. We've also made some other changes on a regional, style, and sector basis to try and maybe to make the portfolio a little less risk on, acknowledging that the cycle may turn a little bit. The economic data may not support us as much as we'd like. So we thought let's keep risk on, but take a little more sort of prudent action of how we actually allocate in the portfolio.
You say you still like the U.S., but you also like the emerging markets. If so, what part of the globe?
Well, particularly I think Asia, because 70% of the emerging market kind of broad index is based in Asia. So if you like China, if you like Asia, then you can generally like emerging markets. I think the reaction this morning in China, with Chinese equities up 6% on this news, kind of speaks to the fact that, well, U.S. markets are kind of priced in some good news on the Fed and on trade. There's definitely hasn't been the case as much overseas, particularly in Asia. So that's an area where we still think is attractive as you get kind of better news on trade. We're also seeing some of the data in China showing sort of signs of kind of green shoots after a lot of stimulus. If that plays out, there's definitely more upside in emerging markets.
Okay, so, for so long this market was obsessed with trade, and to a certain extent still is, but with progress apparently being made, according to the president and others, what else is going to drive this market forward now that that at least is out of the way?
Well, I think the biggest thing that the market will focus on from here on is the growth outlook in the U.S. and overseas, and what does it mean for corporate earnings? We know we're going to see some soft data in the first quarter, but what people want to see and where the real market debate will be from here on out is the slowdown that we've seen over the past few months sort of a mini cycle slowdown, and then we're going to kind of reaccelerate through the middle of the year? Or is this actually sort of a more ominous sign that growth is going to continue to be weak and maybe risk of recession, if not this year, but next year is rising? I think that's what the market really needs to see, is get comfort that it's just sort of a temporary blip.
On that note, Jason, thank you. Jason Draho with UBS Global Wealth Management. And now to those deals that we mentioned earlier. Let's start with General Electric, which agreed to sell its biotech business to Danaher for $21 billion. The move is a strategy reversal for GE, which rejected an approach by Danaher for that business about a year ago. The proceeds of the deal will be used to trim debt, which stood at $121 billion at the end of December. Shares of GE were up more than 6%. Danaher shares gained 8.5%. And now to Barrick Gold, which made an unsolicited $18 billion bid for Newmont Mining. Barrick Gold says the deal is logical for an industry battling high costs. Newmont had previously announced a $10 billion takeover of Goldcorp. And today, Barrick, Newmont, and Goldcorp all finished lower. And finally, Roche is buying gene therapy specialist Spark Therapeutics for $4.3 billion. Spark's portfolio includes treatments for blindness and Huntington's disease. This deal follows a recent push among other drug makers into the gene therapy space. Shares of Spark soared 120%, while Roche fell a fraction. Warren Buffett released his annual letter to shareholders over the weekend. It's an annual event that many investors follow. And this year, it took on added significance given last week's warning by Kraft Heinz, a stock that is one of Berkshire's major holdings. Becky Quick spoke with the Oracle of Omaha and filed this report.
This past weekend, Berkshire Hathaway Chairman and CEO Warren Buffett put out his annual letter to shareholders, which has become a bit of a must-read among the investment community. He talked about all kinds of issues, and we sat down with him in a wide-ranging interview. Covered everything from the markets to the economy to Berkshire's businesses. But we started with the news of the day, and that's Berkshire Hathaway's 26.7% investment in Kraft Heinz and the hard times that the consumer products company has fallen on.
I was wrong in a couple ways on Kraft Heinz. I think we talked the Glide luncheon time about the packaged goods brands losing some ground against the retailers. The packaged goods companies are always in a struggle with retailers. Our family had a grocery store for 100 years, and we went through it. Then we didn't have much bargaining power. But the really strong brands, they can go toe-to-toe with Walmart or Costco or whomever it may be. But the weaker brands tend to lose out.
There was just a Federal Reserve report out on Friday that suggested that GDP for 2018 is probably going to come in slightly below 3%. What do you think the economy is doing right now, just based on your businesses, based on the receipts you see, the companies that you track that you have major shares in?
Right now, just based on the monthly statements I get, and in some cases I get other data in between, but overall things are a little better. I mean, the rate of improvement has tapered, but it certainly hasn't flattened. Now that could change next month.
For Nightly Business Report, I'm Becky Quick in Omaha, Nebraska.
Now, when it comes to Apple, Mr. Buffett says he's not buying more of the stock at these levels, but he's not selling them either. And he told Becky that he would add to his position if the shares got cheaper. Today, the stock hit a 12-week high, closing up a fraction to 174.23. It is time to take a look at some of today's upgrades and downgrades. PayPal was downgraded to neutral from buy at Buckingham Research. The analyst cites short-term challenges, including concerns around its Venmo business and the loss of eBay as a partner. The price target is $99. The shares closed at $96.70, up a fraction, and touched a 52-week high during the trading session. Norwegian Cruise Line was upgraded to outperform from neutral at Macquarie. The analyst cites strong advanced ticket sales as well as the potential for a dividend in the second half of the year. The price target is $65. Norwegian closed up 1% to $55.94. Microsoft was added to the best ideas list over at Wedbush. The analyst cites major cloud opportunities in the future based on recent field checks. The price target is $140, and the firm has an outperform rating on the stock. Shares today closed up a bit to $111.59. Kronos Group was initiated with an underperform rating and new coverage at Jefferies. The analyst says there's little to get excited about the stock other than Altria's investment. The firm adds that the market has gotten ahead of itself. Kronos closed down today more than 7.5% at 2025. Still ahead, the futuristic technologies that are almost realities. Wholesale inventories increased by the most in more than 5 years in December. That increase suggests that goods are piling up, which could represent a slowdown in demand. According to the Commerce Department, inventories rose 1.1%, which was above forecasts. This was a delayed release due to the partial government shutdown. Federal Reserve Chairman Jerome Powell is scheduled to deliver the central bank's semi-annual monetary policy report to Congress tomorrow. But he's no stranger to the halls of Congress. Elon Mui reports on what's been happening behind the scenes.
Thank you very much, Mr. Chairman.
The chairman of the Federal Reserve is only required to appear before Congress 4 times a year. But since taking office a year ago, Powell has been on a Capitol Hill charm offensive.
He's much more direct in answering questions, much more regularly engaged in the Hill conversations.
98 personal phone calls or meetings with lawmakers, 4 times the amount of Janet Yellen in her first year. He's reached out to rank-and-file members and to party leaders, but not as many Democrats as Republicans, who control both chambers of Congress at the time. The heads of the committees that oversee the Fed got special attention, more than 20 individual contacts with those lawmakers.
Perhaps Chairman Powell knows that his job is going to be easier the more that Congress understands what he's doing to fulfill his remit of price stability and full employment.
The Fed could certainly use some friends in Washington.
Unfortunately, they just raised interest rates a little bit because we are doing so well. I'm not happy about that.
So unhappy that the president considered firing Powell.
Thank you very much, Mr. President, for the faith that you have shown in me.
Even though Trump nominated him for the job. But getting rid of Powell might not be so simple, especially when he's built up a bank of goodwill on Capitol Hill.
Thank you for our phone call the other day.
We appreciate some of the transparency efforts that you put forth.
I knew you were in my office. You've been in a lot of our offices.
His record is 6 meetings in just one day, a Democrat and 5 Republicans, including some of the very same lawmakers who will question him this week. For Nightly Business Report, I'm Ilan Mui in Washington.
A big quarter for Etsy. That's where we begin tonight's market focus. The online marketplace for handmade and custom goods reported better than expected earnings and revenue. The CEO says the company benefited from improvements to its search function and expanded marketing. The number of active sellers at the end of the fourth quarter was up about 10% from the prior year, and the number of active buyers increased 20%. Shares were volatile in initial after-hours trading. They ended the regular session up 4%. Also, after the bell, Shake Shack beat on its results, but said full-year revenue would be below expectations. Along with earnings, the company also detailed its expansion plans. The burger chain said it plans to open up to 40 new restaurants this year in the U.S. And with that, shares were all over the place in after hours. They closed the regular session down more than 1% to 52.25. Goodyear director Werner Geisler bought more than $600,000 worth of the company's stock earlier this month. According to Barron's, it's the largest open market purchase by a Goodyear insider in 15 years. The shares rose almost 4% to $20.08. California utility PG&E scrapped plans to give $130 million in proposed bonuses to its employees. This comes after victims of the California wildfires protested, saying the workers don't deserve to be rewarded for good performance. PG&E filed for bankruptcy in January. The shares were down a fraction to $18.65. Qualcomm, the world's biggest supplier of mobile phone chips, is telling investors that it expects to benefit from the rollout of 5G networks. Its chips will supply the 5G connectivity for cars, PCs, and home broadband. 5G, as we have explained, will feature higher speeds than the current 4G networks. And that was just one of the topics at the Mobile World Congress, an annual conference that attracts heavy hitters from the wireless industry. John Ford is covering the event for us from Barcelona, Spain.
"5G, geopolitics, and foldable phones all grabbing attention at Mobile World Congress in Barcelona. Some of tech's power players are positioning themselves for a surge in spending on faster, more power-efficient networks, hoping for a once-in-a-decade opportunity to pull ahead of rivals. With U.S. carriers lighting up the first citywide mobile 5G networks this year, the business opportunity for tech heavyweights like VMware is finally real.
I really see it 2020 is really where it's going to happen. Right now, the national anthem is playing. Next year, the game gets started.
VMware is offering technology to help service providers transition to 5G. And meanwhile, device makers like Huawei and Samsung are already rolling out 5G phones.
Geopolitics looming in the background of this year's show. Intel's Bob Swan said the sooner those clouds clear, the better.
Well, I think we're all excited by the progress that seems to be made in the discussions between the U.S. and China, because we think global trade is good for the industry in particular.
But for so many companies gathering here in Spain, those opportunities depend on the 5G networks actually getting built, tower by tower, as quickly as possible. Ericsson's CEO said in the U.S., a tight labor market is making that a challenge.
And we're probably one of the largest trainer of tower crews in North America, actually. But what we see now is that the tower crews are the limiting capacity to actually modernize faster.
A good economy will help consumers afford gadgets like those foldable phones, both more than $1,900, when 5G is ready. But until then, it's a potential headwind. For Nightly Business Report, I'm John Fort in Barcelona.
Coming up, the motorcycle industry enters the electric era. Here's a look at what to watch for tomorrow. As we reported, the Fed Chair Jerome Powell will be on Capitol Hill to testify on the state of the economy. Housing will be in focus with the release of housing starts, the S&P Case-Shiller Home Price Index, and earnings from Home Depot. And the Senate Finance Committee hosts a hearing on drug prices. That's what to watch for on Tuesday. Bank of America says it will no longer use the Merrill Lynch brand for its investment banking group. It also plans to gradually retire the U.S. trust name to become Bank of America Private Bank. The move is part of CEO Brian Moynihan's One Company strategy. Bank of America acquired Merrill Lynch a decade ago during the financial crisis. It purchased U.S. Trust from Charles Schwab in 2006. The head of the European Union is urging British Prime Minister Theresa May to delay the UK's exit from the EU, which is scheduled for the end of March. Donald Tusk said that would be a, quote, rational solution given the political situation and the lack of a Brexit strategy. But May says a delay will not solve the impasse in Parliament and that a timely exit is within reach.
We have it within our grasp. As I've just said, I've had a real sense from the meetings I've had here, conversations I've had with EU leaders in recent days, a real sense that we can achieve that deal. It's within our grasp to leave with a deal on the 29th of March, and that's where all of my energies are going to be focused.
Meantime, the head of Britain's opposition Labour Party said he could back a second Brexit referendum if his party won power. The Treasury Department has announced new sanctions against Venezuela. The sanctions target the governors of 4 Venezuelan states who are connected to embattled President Nicolas Maduro's government. In a statement, the Treasury Secretary Mnuchin said that these individuals are standing in the way of severely needed humanitarian assistance and are prolonging the suffering of the Venezuelan people. The energy markets are watching, of course, the situation in Venezuela very closely since it is a member of OPEC. But today, the focus was on a tweet from the president, who urged the cartel to lower the cost of crude, saying, quote, "The world cannot take a price hike. Fragile," end quote. The tweet comes after OPEC nations recently embarked on a fresh round of production cuts designed to support prices. And today, the price of domestic crude settled 3% lower. As oil prices fall, gasoline prices are on the rise nationwide. According to the latest Lundberg survey, prices are up 10 cents over the past 2 weeks to $2.44 a gallon. But you wouldn't need gas if you rode an electric motorcycle. It's a segment of the market that motorcycle makers are focused on, especially as sales for gas-powered ones decline. And that means the competition in this relatively new market is heating up. Frank Holland is in New York tonight.
Motorcycle makers are revving up in 2019, racing towards the future of the industry, electric bikes. Gas-powered motorcycle sales have been slumping the last 3 years as the age of the average rider has increased and their income decreased. Harley-Davidson, the iconic and best-selling gas-powered bike maker in the U.S., is offering an electric option in August. It's all part of an effort to attract millennials who just don't want the hogs and choppers that baby boomers enjoy.
All right, so this is the new bike.
Today, Zero Motorcycles, the best-selling electric motorcycle maker, launching their newest model, the SRF. CEO Sam Paschal says the goal is to get millennials to see these bikes as electric vehicles.
The concept of owning a two-wheel Tesla is really enticing to that group. The millennials also tend to be the most comfortable with technology and innovation and change, and they're the early adopters. We have consumers that'll stay with us as we continue to innovate and grow and adapt as a brand.
A recent study by UBS found the top reasons people between 21 and 34 years old would buy a motorcycle is for ease of transportation and environmental reasons. Electric bikes are considered much easier to operate and don't have emissions.
We're going to inspire a new generation of riders, and we are really going to appeal to millennials.
Price and performance are the two major metrics for motorcycles. The SRF will sell for about $19,000. The Strike from Lightning motorcycles will sell for about $13,000. Harley's Livewire will sell for about $30,000.
The electric vehicle space has been on a tear. We're seeing double-digit compound annual growth rates and this feeling of momentum and inevitability in the electric vehicle space.
That momentum building while the interest in motorcycles is downshifting.
And manufacturers are hoping that electric bikes like this one will be the spark that reverses that trend. For Nightly Business Report, I'm Frank Holland in New York City.
Before we go, here's a look at the final numbers on Wall Street today. The Dow Jones Industrial Average rose 60 points to 26,091. However, that is well off the highs of the trading session. We were up almost 200 points at one point in the day. The Nasdaq was up 26 points, and the S&P 500 added about 3. And that is the Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. We'll see you tomorrow.